Welcome to qnawire.
Supposing that Congress is attempting to pass a bill which would subsidize domestic investment, we'd like to know what is going to happen to each of these following trade items if this were to pass. So if Congress subsidizes domestic investment, what can we expect to happen to national saving, domestic investment, net capital outflow, interest rate, exchange rate, trade balances? So when this when this tax credit goes through, it's going to end up encouraging domestic investment, right? Because it's encouraging that borrowing of those funds. And considering that we're now seeing that increase in demand for loanable funds, we're going to see this pressure on this interest rate as a result of those funds. So we can expect that the interest rate is going to increase. With this interest rate increasing, we can also see increased national savings. People save more when the interest rate is higher because they can earn more off of those savings. But also seeing this rise in the interest rate, we're going to see a decrease in our net capital outflow as well. Going further, this decrease in our net capital outflow is going to end up reducing the supply of dollars within this foreign currency exchange market, because we're not putting money out there. Our net capital outflow has fallen, the money is staying domestic, and so we're going to see this decrease in supply of dollars, and that decrease of supply of dollars is going to put this upward pressure on the real exchange rate. So we're going to see the exchange rate increase as a result as well. Now, because we're seeing this reduced net capital output, we're seeing as a result of that a reduction in net exports as well. So that's going to be our trade balance is going to decrease. So, and then domestic investment, obviously that's going to increase. That's the whole purpose of this subsidizing the domestic investment, is to increase it. So what we'd like to know here is, why might large exporters oppose this? So now that we have all of the directions in which these items are going to change as a result of the subsidization, these large exporters are going to oppose it because they want the exports, right? And as we see here, that our trade balance is actually decreasing, which means that the US is going to be exporting less than they're importing. But these large exporters obviously want to continue to export. So they're going to oppose it simply because that trade balance has fallen, or net exports has decreased.